Thank you for joining us. Today we're going to do an overview of all the popular government mortgages that are geared really towards first-time home buyers, and many of these programs offer little to no down payment. We're going to go through the highlights and look at a few of the differences between each program. Home buyers that have questions about anything they see in this video can, of course, visit us at USDAmortgagehub.com or call 1-800-691-8826 7 days a week. First, we'll take a look at the basic highlights for the USDA Rural Housing Loan. This program is a very popular program for first-time home buyers, mainly because it does offer 100% financing in approved eligible locations throughout the U.S. This program, of course, is backed by the United States Department of Agriculture and Rural Housing, and again, is really geared to help expand the rural communities throughout the country. Buyers, not only is it 100% financing, but buyers can also have their closing costs paid by the home seller, or they can even roll in their closing costs into their loan, assuming they have a supporting higher appraisal. Any buyer can apply for a USDA loan. Like all the government loan programs that we're going to look at today, the USDA is not reserved just for first-time home buyers. There are no loan amount limits with USDA mortgages. Buyers qualify based on their debt-to-income ratios. Since there is limitations on the household income, that generally will limit how much the loan amount could be. USDA has low monthly mortgage insurance, and there is no cash savings requirements with USDA loans. Buyers aren't required to have a minimum amount of savings in order to be eligible. Just a couple more highlights. Really, like all the other government loan programs that we're going to review today, the USDA does have low 30-year fixed interest rates. There are no early payoff or prepayment penalties, early termination penalties for the loan. Home buyers can sell or move their home, move any time without penalty. Most homes for sale that are located in an eligible area are okay for financing, assuming they meet the basic HUD requirements in regards to function and livability of the home. This program, it's not set for really homes that need extensive rehabilitation or large farms or large acreage. It's really set for basic single-family homes, townhomes that are located in an eligible area, and homes that are in pretty good overall repair that folks can move into with little repairs. Now, there are certain things that are expected with many used homes for sale, especially, and most of those things are okay. Small problems are okay with all of these programs that we're going to look at. There are refinance programs in place too. The USDA has a lot of refinance options for homeowners that currently have a 502 guaranteed loan. So there are options for homeowners that may need to refinance down the road. The next program we're going to review is the FHA loan. This is probably the most popular government-backed mortgage, and this is backed by the Federal Housing Administration. The FHA loan does have a loan limit. Currently, the loan limit is $314,827 in most locations throughout the country. There are set high-cost locations that are in high-cost areas, mainly parts of California, maybe South Florida, around D.C. and in the Northeast. Higher cost locations do permit, though, higher loan limits, and all the loan limits can be found on our website. FHA does require a minimum 3.5% down payment. Just like the USDA loan, FHA offers standard 30-year, 15-year fixed terms. no prepayment penalty, no early termination penalties with all these programs that we're going to look at, all the government loans. Generally, most lenders and banks are going to require that buyers have generally in between a 580 to 620 credit score for the maximum amount of financing of 96.5%. Lower FICO scores, in some cases down to 500, can be approved for home buyers that have a larger down payment, maybe 10% down payment. They will have more options, more flexibility in regards to the minimum credit score needed to qualify. Home buyers' closing costs can be paid by the home seller, just like the USDA loan that we looked at previously. The FHA mortgage insurance is going to be FHA, USDA, and the VA loan. They all have a one-time premium that is rolled into the home buyer's loan. So that can always be included, but it's always a one-time premium, and it varies depending on the loan program. FHA, for the maximum amount of financing, is currently a 1.75% premium. USDA is a 1% premium, and VA is just over 2% for home buyers that are using that program for the first time. FHA loans, they're for basic single-family homes, townhomes, and approved FHA condominiums. FHA does not have, though, any restrictions on where the home is located. Let's look at the core differences between the FHA and the USDA loan. The USDA, it offers 100% financing. FHA requires a small 3.5% down payment. USDA does have cheaper monthly mortgage insurance costs. That term can be different depending on the loan program, but most people know it as maybe PMI or private mortgage insurance. But again, the term is different depending on the program. But USDA, that monthly premium that is added to the home buyer's monthly payment, it is cheaper with a USDA loan. Now, the advantage for FHA is that it does not have restrictions on the property location or the household income. Keep in mind, for a USDA loan, these loans generally for large metropolitan areas, the USDA loan is generally not an option. The house has to be located in a rural defined location. And again, home buyers can read on the website more information and see the links to the actual map that shows what is defined rural locations. But generally, most big cities, big metropolitan areas, they're not going to be approved in most cases for a USDA loan. And again, USDA has household income limitations. Depending on the size of the household, the state, county, there's a variety of factors. And there is also links to the income calculator that home buyers can look at and see the income limits for the 502 guarantee program, USDA guarantee program. But yes, one thing with FHA, though, there is no limits on the income. Home buyers can make as much, it doesn't matter how much money they make, it doesn't matter where the property is located. Both of the programs, though, they do both offer low, secure, fixed interest rates with no early payoff penalties. They all have that in common. Let's look at now the VA loan. This is VA is really the other 100% financing option. VA is done. This program is administered through the Veterans Administration for all of our current and past military veterans. And this is, again, a great program because not only does it offer 100% financing, but there is no monthly mortgage insurance or PMI charge with VA loans. Home sellers can pay all the VA allowable closing costs, again, to further reduce the out-of-pocket expense to the veteran. Just like the previous two programs we looked at, VA does offer secure 15, 30-year fixed terms with no prepayment penalty. Loan amount limits with the VA range from $484,350 for most of the country up to over $700,000 for high-cost locations. So the loan amount limits can be much higher with VA. And then there's also exceptions. There's even higher for the VA Jumbo. There's a VA High Balance or VA Jumbo program that is also available for even much higher loan amounts. That program does require a small down payment depending on, again, where the property is located. For the VA loan, though, again, you must be eligible past or present military in order to qualify for the VA loan. We're going to look at just some basic loan qualifying aspects. This applies to all three programs. Really, the core factors that are looked at in reviewing the qualifying is the credit history, of course. All the programs are generally, closely related when it comes to credit history and what's needed there. Job history, home buyers will need to show a 2-year history of employment. There are some exceptions to this for recent college graduates and other exceptions to that rule. Income and assets, they have to be fully documented. The buyer has to fully document their income through tax returns, W-2s, if they are regularly employed, and also assets, their bank savings accounts and any other retirement accounts. They must be able to document and show bank statements to document these things. There are debt-to-income ratio limits for each program. These limits can vary depending on the program and depending on the credit profile and the down payment that the borrower makes. So there are variables that affect the debt-to-income ratio limits. But generally for USDA, a good rule of thumb is about a 30% limit, 30% of the buyer's gross monthly income limit for housing. And again, when we say housing payment, that includes taxes, homeowners insurance, homeowners association fees if applicable, and anything else like flood insurance if it's applicable. So FHA and VA loans, sometimes those debt-to-income ratio limits go well into 40, 45%, and sometimes even a little higher. Again, depending on the credit profile and the down payment. Just a basic rundown of the loan documents that would be needed for processing. Again, pretty much the same across the board for all the programs, but buyers want to have the last 2 years of tax returns and W-2s, last 2 months of pay stubs and bank statements, also a copy of any retirement account statements, maybe if they have a 401k or an IRA retirement account. The most recent statement for those accounts is always good. Renters, current renters should have their landlord's contact information for rent verification. Buyers want to also have a copy of their ID or driver's license. And then if you are applying for the VA loan, you want to ensure that you have a copy of your certificate of eligibility for the VA loan. And if you do not have that, really most lenders, any lender can help you obtain that. Home buyers that have questions, again, are encouraged to reach out to us 7 days a week by visiting USDAmortgagehub.com or call us at 1-800-691-8826. Thank you.